The upside that COSM saw today is actually a liquidity trap, or could be considered liquidity for a short-term downside. Now, what do I mean by that? Well, let's just go ahead and review and really talk about this within this video. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with a COSM technicals and raw price action threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. So with that said, let's go ahead and begin. So you guys, I'm actually in the kitchen right now, not in the studio, and I am here because my toddler, actually, him and I are alone today. So if you hear him chime in, please don't mind him. He's actually just wanting to give his thoughts on the trade. So okay, with that said, now let's dive right into the chart. So we're looking at COSM here on the 4-hour chart, and so we did notice this head and shoulders potential pattern that we're looking at. Now, I did say yesterday that there is also the potential of either an inverted cup and handle or an Adam and Eve formation. Now, usually when short positions want to enter a trade like that, they usually wait for the confirmation. Now, the confirmation actually happens not at the breakout. It actually happens after the breakout and upon testing the newly converted support into then resistance. In this case, you see that we are actually failing or succeeding that resistance and have now found a way down here. So this could potentially pose a real threat to long positions. I need you guys to be able to practice your risk management within this price action, okay? Because there could be a serious threat to the downside here. But we are going to look over a couple things that may invalidate this thesis. After all, we are in a 4-hour chart. After all, we are in a 4-hour chart here. And it is, shorter time periods don't always succeed. So, and now let's look at the next chart right over here. So this is what I mean by an invalidation, a potential invalidation of this Adam and Eve formation. So this is actually an ascending triangle, particularly found after an uptrend. Now, ascending triangles do present a bullish outlook, and we can actually review its price objective. We take a trend line from the top of the triangle to the hypotenuse of the triangle bottom, and we apply this trend line to the imposed area of breakout, which is usually located at about 70% to the apex of the triangle, which could be located right about here. 70 to 75% on average, right? So we are looking at a top target of about $1.43 in this case, which has direct confluence with actually, let me show you, with the take profit zone that we've been talking about at about 137. So I don't have it here, but it's okay. I'm going to show you the, let's see. We have here 143, and what did that fib say over there? 143 has direct confluence with our 4-spot 236 Fibonacci ratio. So there is some confluence there, and you know what? Let's pull up an SMA just to see if there's any confluence there as well. Okay, nothing just quite yet. I'm sure we can find that in probably a larger time frame, but it's okay. We're going to go ahead and move accordingly here. So this, yes, this ascending triangle, the dangers here are this, okay, are these. We are looking at the 10-day simple moving average here in the daily chart, now converted into a form of resistance. Usually when the 10-day simple moving average turns into resistance, this can, likely guide price action towards the downside, as people will start using it as a form of resistance like such, on the way down. It's very typical for things like that to happen, similar to this right here, where we continuously touch it and touch it and touch it, and then we eventually fail until we succeeded and then move along, right? So it is dangerous when we're looking at a moving average like this above us. Okay, so there is a relevant area of support here that we've been talking about for some time, which is actually the gap that we filled. That is, let's see, between the area of 30 cents and 36 cents. This could be an area of support alongside the 1-spot 618 at 34.65. But please note that we have been talking about this larger, broadening descending wedge not having come back to retest its newly converted resistance into support before a continuation onto the upside. So pretty much what I'm trying to say is that even if we go down to about 23 cents, the 19-cent area that I've been talking about, the 20-cent area, we would still in essence be creating just another higher low. Meaning that we're in this like structure here, just creating just higher lows on the way up. Okay, so I know that the price target, or what we want to do, is succeed the $1 target, which actually could be potential. It could be a valid potential by the end of this week. But we do have to practice some patience here, and we definitely have to watch our positions, right, and follow some technicals. Now, let's go ahead and move on to this chart here. So I wanted to touch on momentum and volatility here. So new viewers, you're looking at volatility here represented by this indicator BBWP. Volatility is direction neutral, and we pair it with an indicator similar to this one here to gauge a bias for that direction. This is stochastic momentum, which is proprietary to TradingView software, and which actually, by the way, I do have a link in the description below for you to consider making an account with TradingView if you wanna chart like I do. If you wanna I'm actually in the process of sharing these charts publicly so that you can see and move along or thread on your just explore them on your own time. And it's particular to only TradingView users. Another reason that we can actually see the ascending triangle here is because of this. Usually when you have an ascending triangle, one of the criteria to meet is descent in volume as we're looking at the triangle form. So this is another indication that it is potentially setting up a bullish statement, but the technicals are suggesting a continuation to the way down. Let's go ahead and grab a bias for that direction. Actually, we're going to open up the RSI properties now. We're going to look at the 12-hour here, as these drives of hidden bullish divergence, they're not invalidated. I have them dimmed out because at the current moment we have 3 drives of what can be called, let me just make sure, that what can be called hidden bearish divergence. And these 3 drives are actually signaling that and have taken precedence since it is after the drives of bullish divergence here. So divergence is just the opposition of price action versus momentum. And in this case, we are using RSI to represent momentum. And now, as you can see, actually, the RSI is suggesting a continuation to the downside, particular to the 12-hour time frame. So that can present a danger as well. Let's go ahead and open up a multi-pane to grab a deeper bias for at least tomorrow's session. So we're going to do first a 30-minute time frame RSI. So for the new viewers, new listeners, this bottom half of the RSI is the bear control zone, or the bearish control zone. The upper half is the bullish control zone. Okay, the inner workings of either zones would be considered the bear weakness, the weakness percentile, and the outer zones would be considered the strength percentile. Okay, so now the 30-minute RSI is suggesting a continuation to the downside, and it is reaching the deeper levels of, let's make this a little larger, and it is reaching the deep levels of the bear weakness percentile, signaling a potential drop into bear strength. We've also made a bearish cross below the moving average, represented by this pink line right over here. Sorry guys, my son is watching Monsters vs. Aliens, and he's over there reacting to the songs. Now, the bi-hourly RSI is suggesting a continuation onto the downside as well. Know that we're in the deep areas of the bear weakness percentile, which usually signals a potential drop into bear strength. Okay, so now as long as we're below the moving average, it is bearish, and you can see here that the 6-hour is also below the moving average, and it is now moving away from the shallow areas of the bear weakness percentile, which usually means a continuation to the downside. Now, here's the curious part: the daily time frame RSI is in the deep areas of the bull weakness percentile, which indicates a potential reversal into the bull strength percentile. That is telling me. Let's look at the buy daily before I say that. Okay, that is telling me. Yeah, that is telling me that there is a potential reversal at play. And it would happen actually after some continuation to the downside. The daily time frame is like I said in the deep areas here, so this can take some time to fulfill. But yeah, please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as a form of entertainment. I can't actually suggest for you to buy or sell any assets. Okay, so I need you guys to do your own DD and everything will be okay. Alright, so I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, please don't hesitate to reach out to me on Twitter or Discord. I'll make sure to leave the links in the description below for you to consider joining the ARCa trading community in Discord, okay? So with that said, I wish you well, a very good night, and I will catch you at the bell mañana. Adios.